Well, you guys probably know what time it is. It's time to talk about some stocks that, quite honestly, I hate to be the bearer of bad news, but these stocks are just terrible stocks to own in my opinion. And unfortunately, a lot of these stocks are retail favorite type stocks, so I know this video will create some controversy. I know some folks won't be happy, but you guys know, hey, I'm here to give you guys the truth, give you an honest opinion on these stocks, so that's exactly what we're going to do today. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. Now, let me be upfront and honest with you guys right here. We all have bad stock picks, guys. Everybody, myself, Warren Buffett, who goes out every year during his annual meeting and talks about all the mistakes that he made investing during that year. He's had bad stock picks too, and he's like the greatest investor ever. So it's not unusual to have bad stocks, and I'm not here to judge anybody or call anybody out or anything else like that. I can't. I mean, I've been there. I've done that. I was investing during the financial crisis, which was honestly one of the easiest times. All you had to do was buy something, just buy an index fund, something, and you made a ton of money coming out of it. And yet I managed to pick one of just a small handful of stocks that just basically were going to suck coming out of that. You know, GE is what the stock I'm referring to specifically there. That it just sucked. I mean, I literally could have closed my eyes, picked the stock, and it probably would have done better than my big investment in GE did. So it's not like I haven't made mistakes, and I've made mistakes during bull markets. During the easiest time to ever not make a mistake, you know, during an intense bear market during the financial crisis, I still made mistakes, even though it was very, very easy pickings and very, very easy to see kind of winners from losers. And of course, I still got it wrong. So there's no judgment here. There's not me judging anybody or anything else like that. We have all done that. We have all been there. It is part of being a long-term buy and hold investor, or honestly, any investor. You're going to have bad investments if you do this for any length of time. So kind of get the idea of 2020, 2021 out of your head here. Everything always goes up. No matter what you throw money at, just buy the dip and it goes up. Those times are rare, rare, rare occasions. They don't happen often. That was basically the tippy top of, you know, the greatest bull run in the history of the stock market. That was kind of that, delusional craziness at the top there, that frothiness up at the top per se. That just, it doesn't happen often, and that's not realistic in terms of investing. You're going to have losers. You're going to have bad picks. You're going to have stocks that go nowhere. You're going to have stocks that honestly fail and go to 0 too as well. It's going to happen somewhere along your investing career at some point in time. So this is a reality, and it's a reality of investing, so there's no judgment here. But we absolutely got to talk about these stocks because I'm seeing a lot of things that I don't like with these stocks. So stock number one would be Peloton. And honestly, guys, I know, I hear you right now. I thought we were completely done with this stock. I thought everybody kind of figured out this was a terrible long-term play, or honestly, even a short-term play. I guess there's probably a trading game you could play with it of some sort. But here we are. It's gaining traction again, and I don't know why. I don't get it. There's nothing that has changed fundamentally with that company to make it from a company that was only going to be a winner during a pandemic type environment. I guess if you're betting on the fact that we're going to go under lockdown again, the entire globe for a period of, a long period of time, maybe, but barring something like that, the long-term thesis hasn't changed for Peloton. There's just no growth number, no number you can attach to it, that's going to justify a higher valuation in the future. They're expensive. They require the subscription service to really take off, and I just don't see people paying for that subscription service, given the fact that everybody's kind of cutting back on subscription services. And more importantly, if I'm going to pay a subscription service, I might as well just go to the gym because it costs about as much as a gym membership does, obviously depending upon the gym, guys. I know there's great gyms out there that cost, $200 a month for a membership, and then there's other ones out there for $10 and $20, and I guess 40, 50 is probably about normal for a gym membership there. It's been a while since I've had one, guys, so if I'm a little bit off on my numbers there, I got it. But the reality is that's a subscription that I don't think people are going to pay just to ride their bike every day or their treadmill or whatever the heck they have. And the numbers have bore that out. It's not like this is just a hot take opinion that Luke's giving and, there's no numbers behind it. No, go look at their subscription numbers and you tell me what the growth rates are. And then you tell me if that justifies a much higher valuation in the future that makes this a great investment to be in long term. And stock number two is Carvana. And let's be honest here, guys, about this stock in general. If they cannot manage to turn this business around, turn a profit, make it incredibly profitable, increase the growth, increase everything during the greatest bull market of used cars in the history of used car prices, we all experienced it, right? Now, this wasn't, some sort of obviously the reason behind it was kind of pandemic induced. But if they can't turn a profit and turn those numbers around during the greatest bull market of all time for used cars, what the heck are they going to do coming into a slowdown in the economy? Now, we can debate whether or not we're going to hit a recession or not, whether or not how bad that recession is going to be. No matter how you slice it, the point is nobody's flush with cash anymore like they were back when this bull run started for them, and they couldn't print money back then. So how in the world are they going to print money as used car prices continue to fall and as the economy slows? Even if we don't have just a slowing or a stagnation of the economy, How is that going to help Carvana? How are they magically going to turn everything around and magically get more profitable and magically start seeing revenue really increase if they couldn't do it during the greatest bull market in the history of used cars? I just don't see any sort of play here. It's one that just continues to baffle me as to why anybody's playing this outside of some sort of a trading game, whatever the case is. Again, we're not traders here. I'm not a trader, so I see games that you can play with it, but I'm not a trader here. So outside of that, I don't know why that's gaining a little bit of traction in terms of being like a turnaround play or something else like that. Management team has shown nothing that they have an actual viable plan that somehow supersedes the current environment we in. The environment we are probably going in, regardless of whether you think it's mild or major, either or, take your pick. Nothing that they've laid out would actually get us from point A to point B in regards to that, especially given how they executed during the greatest bull market of all time. So this is one I'm just staying completely away from here, and it's one that I personally am not willing to put any money into. I'm just not sure what's going for it. I mean, we got higher interest rates, and I don't think the Feds are lowering those rates anytime soon. Most certainly not lowering it down to 0% anytime soon. Again, if you weren't printing money when people could basically get money for nothing, how the heck are you going to print money when there's any sort of an interest rate at all attached to the Fed and what the Fed funds rate is? I don't know. There just doesn't seem to be a whole lot there. All right, so now we're at the more controversial part of my list here. I know I'm going to get a lot of flack down in the comments, and we actually have a new stock that I've never discussed before on this channel, period, that's been added to kind of this pile up here of bad stocks. So, and that one's going to create some controversy as well. So, let's get down to these again. These are controversial. I understand. I'm more than happy to debate them down in the comments section. But hey, I got to be honest with you guys. I got to be upfront. I got to give you guys the truth without the hype. And these stocks, unfortunately, regardless of whether they're controversial or not, I absolutely think are just bad stocks in my opinion. So the third stock on this list is Lucid. And guys, we just saw another bad sign from Lucid come out recently where they're basically going to dilute shareholders again, which, I understand sometimes, companies raise capital, right? I mean, Elon raised capital. Even after Tesla was on a huge run, they're already profitable, he raised capital anyways. And that's what you do whenever you need more capital to continue to expand the business that is now profitable faster than what you could with your current cash pile. Oh, and by the way, Tesla stock was on an epic run, so you're getting a lot of bang for your buck. Lucid's kind of in the exact opposite situation where, the stock price is really depressed down and they need money just to operate, just to stay alive. This isn't to build out new factories or expand further because the demand is through the roof. None of those things apply to Lucid. This is just simply being done to keep the lights on. So that's not a good sign there at all. I'm sorry, when Lucid was at 40, I was an idiot for not buying Lucid because it's just going to the moon and it's going to compete with Tesla and it is the next Tesla and all this other stuff like that. Oh, by the way, that was before they actually sold their first car, but never mind, facts or anything else like that during that hype time. It was just everything to the moon. And, sure enough, we've seen the story kind of play out with Lucid. The hard part is not putting out a concept. The hard part is not getting kind of those first few out the door. The hard part is scaling, and they are absolutely struggling with scale. And that's not even discussing demand problems and everything else because we're going into an economic slowdown. This isn't, the freewheeling 0% interest days of money and free money. This is an economic slowdown, and Lucid is a very premium vehicle. I've seen them in real life. I've been to the Lucid store down in Miami, actually. I was down there for something and I actually went into the store. They actually just had one. So I was like, oh, cool, let me go check it out. It's a beautiful car. Super nice, super high price tag. And just when I'm looking at other cars I can buy in that price range right now, I'm probably leaning towards something else, number one. And number two, it's just, I'm probably not making that purchase at all, period, right now, because, it's just not the best time to do that sort of thing, especially, if you're going to take it a loan and take a 5 or 6% interest rate right now on a car loan. That's just not nearly as appealing to me as it would have been, at 0% or 2% or 1% or something like that on the car loan. And when money was flowing in like crazy, for me, and I know a lot of other folks that are able to, in the income levels that can afford a Lucid, that's kind of the approach you're taking is, hey, let's keep some, instead of putting my dry powder out there on toys, let me keep some of that dry powder here for deals and opportunities that are inevitably going to come up from an economic slowdown. Obviously, you guys saw what I was doing last year. I was pouring everything I could into the stock market last year because that was a great opportunity. But now coming out of that, and as we kind of see if we can turn that corner and kind of get ourselves out of this, inflation mess and everything else, I want to have dry powder ready for some of the consequences of pulling ourselves out of that mess that's going to happen to me in other industries like commercial real estate or something like that. So I can either buy a Lucid or I can buy that, or, I can buy a part of a commercial building of some sort or use that money towards an additional chunk of money towards a commercial building. And that's kind of where I'm leaning. And I know a lot of folks that I talk to, that's absolutely what their investor types, so that's what they're leaning towards as well. So in regards to Lucid and how it's going to go and how it's going to perform, I don't know. The good news is they do have good backing. But as we've seen in the past, the Saudis are not afraid to pull the plug on an investment, basically saying, hey, we're not putting any money towards that. We saw that earlier this year. Has not happened to Lucid yet, but it is a possibility that's out there. So for me, until they actually prove that they can sail, prove that they can move into other areas that are going to do well during a down economy, or at least a slowing economy, I don't have any desire to own any Lucid stock, regardless of what anybody told me in the comments section or how much blasting I took. It just wasn't the right play then. It's not the right play now for me. All right, so 2 more stocks to go. One of them's a brand new one here, so stick around for that. But first, I got to give you guys number 4, and that's AMC. And I got it. Go ahead now. I just unload on me down in the comments. I totally understand where those folks are coming from, but unfortunately, I think they're wrong. I don't think anything that AMC's management team has done has been an actual good long-term decision for the stock, for the company itself, and any sort of, valuation that I can place on that company, it just comes down to, $4, maybe 5 or so. I can't get there any other way. I can't get any higher than that. And I mean, I'm trying to be very, very generous with that valuation there. In my opinion, of course, obviously that's the reason why I tell you guys, do your own valuation, because you may come up with a very different number than I do. And it doesn't mean I'm right and you're wrong, or you're right and I'm wrong. It just means we have a differing viewpoint in regards to this stock. And honestly, I think a lot of the folks who get into the stock and talk about all the short interest and all the other things like that, mathematically couldn't happen. There's not enough money in the world. The Fed would have to print money and, make that transaction actually happen, when obviously all the short sellers, if they were ever actually forced to pay, they're just going to file for bankruptcy and open up the doors the very next day underneath a different company name. And now they're completely out of the situation. But let's not let facts get in the way of a good narrative and a good, hey, basically you're buying it, it's going to go to 100,000 and then you're going to be rich. So just, own it at all cost at $50, $60, whatever the number was. Now, doesn't mean you can't have another hype run up like that, but it's based on nothing outside of pure speculation. And I'm just not a speculator, guys. I'm sorry. I own some speculative stocks. I think if I wanted to trade it of some sort, there might be a trade there. I don't know. But, the idea that it's going to this $100,000 mark or $1,000 per share or anything else crazy like that, it just hasn't happened yet. And unfortunately, you don't buy AMC, at least at this point in time. I don't know a lot of folks that are buying AMC for the business because it's undervalued, because they see potential there, future growth in the company. You're buying it because you're hoping to hit that $1,000 a share, $100,000 a share. So to me, it's basically gambling. And, I don't know, gambling to me is just a lot more fun in a casino than it would be with this stock here. So I'm staying away from it. And on to the final stock here that we're going to talk about today. And yeah, guys, it's a new one. We've never talked about it on this channel before, but it's been getting a lot of attention. It's popped up in my group a lot lately. It's popped up kind of just, in the interwebs here. I've heard it in some other circles that I kind of run in. It's just kind of a stock that I'm just kind of like, I don't understand the play there at all. But anyways, we got to talk about it. It's the last one on the list today, and that's Mullen. Now, I have no idea what the play here is at all, guys. I really don't. I mean, it's as if somebody thinks the 2020 hype run or 2021 hype run is going to basically, regenerate itself and start all over again, because this is just pure speculation at this stage. And I don't need any more proof other than the fact that they just executed a 25-to-1 split just to stay listed, guys, above that dollar mark that they need to stay listed. And I'm pretty sure they hit that mark for long enough to where they won't get delisted now. However, they still can't stay above that dollar mark, so they're going to be right back in the doghouse whenever this whole thing kind of, gets looked at again. So I don't know what the play is here, guys. I don't understand the narrative behind it. They're burning cash. They don't have a lot of cash left in order to move forward. So I just don't see a way that they're going to survive this thing. Maybe they do. Maybe there's something else out there that I didn't see in my research when I looked at this stock. But, to me, if we have unprofitable companies that are producing revenue and actually doing something, they're just unprofitable, really struggling in this environment, and really, maybe being at risk at bankruptcy if things don't improve in the next year or two. I just don't see how a pre-revenue company that's just burning cash like crazy is going to make it in this sort of environment here. Now, obviously, I could be wrong. Who knows? But to me, this is pure speculation at this stage. This is gambling. Once again, this is not any sort of, intellectual play or any other sort of, hey, I'm really looking at it here and Wall Street's missing this opportunity. Right now, you're purely speculating that something is going to fundamentally change with this business to actually turn it around there. And that fundamental change has not happened yet. So that's kind of my take on that stock. And remember, if you want to avoid stocks like this and see the other stocks that I buy in real time, see my watch list with price targets, take 5 courses for free, get free access to the stock analyzer tool that is coming shortly, guys. And, get to hang out in our Discord, get to slide in my DMs, talk to me anytime you want. I make 3 to 5 videos a week just for the group in there and a ton more. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see the stocks I'm buying now. And click here to see my exact plan during this market. So thanks for watching, and we'll see you in the next one.